Hello and welcome to Policy Watch, your weekly date with everything that's making headlines in the world of business and economics. I'm Surabhi Upadhyay. Banking, telecom and India as the world's third largest economy. It's a packed half an hour ahead. And joining me today in the studios is Himangshu Watts, Senior Editor at the Economic Times. Himangshu, always great to have you. We have plenty to discuss as usual. Well, let's get on then straight away to our first story this week. It's a high-profile blame game and at the center of it, a huge figure, 2.43 trillion rupees. Now, that's the amount of gross non-performing loans of 40 listed banks at the end of December 2013. The number has grown by 36% over the last 1 year. The RBI isn't mincing words. It believes that much of these bad loans at public sector banks have arisen because of the government's diktats. In a discussion paper presented to the government, the central bank has said that bad loans grew not just because of a downturn in the economy, but because banks gave out loans under pressure from the government without adhering to prudential norms. A charge which is being, of course, refuted by the Finance Ministry. But this isn't the end of India's NPA woes. Now, with the Reserve Bank tightening norms on banks' overseas lending, many analysts and rating agencies feel that NPAs will only keep going up in the coming months. Earlier, companies could raise overseas loans by getting an Indian bank to extend a guarantee on the foreign loan through its overseas branch. This money could then be used to refinance local loans. However, the RBI has curbed this practice from the 22nd of April. Simply put, now banks cannot extend foreign loans or guarantees which companies could use to repay their existing local currency debt. This is the situation. Himanshu, of course, the story was picked up by the Economic Times. This whole Finance Ministry versus RBI and, who's really responsible for the situation. Yeah, it's an interesting dichotomy that's playing out because the government seems to be very clear. It says that it had to do this to boost the economy. Is that an argument which can be accepted?
I think the key issue here is the growing NPAs of banks, the non-performing assets, the loans which corporates are unable to repay. So what they do is, it's been a stress period for most companies. So for many companies, they have some rupee loans. They like to convert it into overseas loans. If it's a well-performing project for which the loan has been taken, it's well and good, all is well. But what also happens is, if a project is stranded and there's a loan, now instead of admitting that, look, this is a bad loan, let's restructure it, they try to defer it, what some economists call evergreening it. So then from the domestic side, the same bank will give a guarantee and make it a forex loan from another side without changing the risk. The asset is still bad. It is a high risk potential NPA. And that is what RBI has said, look, this cannot happen. Because, at some stage you got to face it. There are NPAs, you have to do something about it. And you cannot just be doing some financial jugglery to disguise an NPA.
No, which is why I guess I've been looking at a lot of brokerage estimates and most of the opinions on the street seems to say that now, because this easy route of simply raising an overseas loan will not be available anymore at the same cost, you might see bad loans go up by as much as 100 or 200 basis points in the given future. So then, I mean, should one expect, the red ink to keep showing up in the coming quarters as well?
Yeah, to put it differently, the disguised red ink will now be visible. So it's not that, some new losses will come out from somewhere. Certain things that were being concealed like this will be more visible.
It brings me to the larger picture of how bad loans are being managed or have been managed, at least in this downturn in the Indian economy. We just go by numbers again. So here are basic details which are available all throughout. Gross NPAs of public sector banks at the end of December 2013, 4.7%. Agencies like ICRA say this figure will go up to 5% if not more by the end of the fiscal. And of course, we're already in the new year. Now, again, to come back to this whole question of whether public sector banks were being careless or whether they were being forced to lend in order to kickstart the economy. Which side of the argument seems more convincing to you?
See, to some extent, the public sector banks are under much greater pressure. They can't, it's difficult for them to be 100% working in a system that they look at a project in its entirety, completely fair and decide whether to lend or not. Very often, pressures are brought upon them.
So you're saying that this whole concept of an independent public sector bank is basically a fallacy in the Indian context?
Well, you shouldn't single out the public sector bank. Public sector in general are prone to pressures from the ministries that control them, whether it is in appointments, whether it is in transfers. If you have, say, the power ministry, then there would be a pressure to maybe give a contract for some equipment supplier. If you have the oil ministry, the public sector, there'll be pressure, okay, give so-and-so a petrol pump. So we're not living in an ideal world. So to that extent, there would be pressures everywhere. So one shouldn't single out the banks.
Okay. Yeah. The question is, I think the RBI's point of view was clear from the Economic Times story, was that even if you were lending because of certain norms, lend to certain priority sectors, or let's say infrastructure-heavy sectors, why were prudential norms not kept in mind? And that question can extend also to the way this whole CDR, corporate debt restructuring exercise takes place in the country, where it seems that, loans are rolled over and more time is given to corporates, but the rate of recovery hasn't been very healthy in the recent past.
So you mentioned the infrastructure sector. So there it's not just the public sector banks. Some years ago, when suddenly private initiative in infrastructure became, very hot and desirable, to an extent, even some private banks were queuing up because they wanted that in the portfolio, because that was the huge big thing happening. You're talking of, the next planned period, half the power capacity would come from private sector. Now that's very, very big money. So some of the banks did want to participate in this, new growth area of their own lending, their own portfolio. And then many things went wrong in that sector. So that's one side of the story. Plus, the prudential norms in some cases may not have been followed, but I'm not in a position to really say which one or why.
Sure enough. But if we talk about, the immediate future, and of course you track the energy space very closely, given that a lot of these projects are extremely capital intensive and there's been a lot of lending in the past, do you get the sense that now companies would be in a better position to start servicing some of these loans? Or do you think this is a prolonged problem patch and just May 16 or a change of government is not going to take away this debt issue that we're dealing with?
It will not, but say if you look at the power sector, now there will be thousands and thousands of crores of power projects which are standard. But in so many of them, the moment you are able to supply coal to them, then the whole thing kickstarts, and almost overnight an NPA will turn into a good asset. So
or gas for that matter, if you can get gas at a
gas is a tougher issue because
if
you import, it is very, very costly, and domestic gas, there is no chance of anything going up significantly before 2017 or something. Whereas coal, you have a lot in India. It's just a matter of giving a few clearances. Coal India has got coal mines, which has got environmental clearance for a particular capacity. Now, if they've done well, they've reached that capacity, say, by January in the fiscal year, then they cannot produce in February and March because they will exceed that capacity.
Right.
And that coal is at the surface, lying exposed, but you can't do anything.
Used.
So, as far as the thermal power sector is concerned, it is possible to give a good push and make sure the coal which is on the ground is produced. So, as soon as that is done, a lot of the stress would go. It would still require deferring some loans or some kind of a restructuring, but these are good, proper assets.
Okay, well, let's see how and when that really starts happening. For us, it's time for a very quick break. On the other side, we should focus to another sector, telecom. Some good news seems to be ringing in. We'll analyze the details. Welcome back here with Policy Watch. Now, there was some good news in store for the telecom sector this week. In a major relief to operators like Bharti Airtel, Vodafone and Idea Cellular, Telecom Tribunal TDSAT overturned a government ban on pacts between carriers that allow them to provide 3G services beyond their license zones. The cost of purchasing a 3G airwaves in 2010 auction was so high that no single carrier bought a nationwide permit. Instead, the country's top 3 carriers entered into pacts with each other to provide seamless 3G services across different circles. The Telecom Ministry then stepped in, banning these pacts, calling them illegal. The ministry felt that these pacts were allowing companies to offer 3G services in the entire country without them actually buying an all-India permit. 3G data services currently account for roughly 4% of telecom companies' total revenue, but with a growth rate of 70%, 3G revenue is growing much faster than basic voice services. Now, it's not yet clear whether the government will challenge this TDSAT ruling in the Supreme Court, but until then, it's surely celebration time for cellular operators. So, Himangshu, this is one sector that has seen so much of negative news that I think maybe after, 2 years, there was a favorable ruling coming in, at least for the companies. Do you think the last word has been now said on this whole 3G issue, both from the company's perspective and consumers having some clarity about, 3G roaming?
Well, it's difficult to say whether the last word has been said or not, but I think there's near consensus that this is a sector which has, it's been a kind of a poster boy for India's economic liberalization. The first one where you had large-scale private sector entry, and yet you had the lowest prices. Perhaps India should be one of the lowest priced telecom markets in the world. And then it went through huge upheavals. So it is good news, and the government also broadly would be supporting the sector, that something good should come out of it. And I think it would finally depend on the new government, what it wants to do with it. The other side of the story is from the consumers. Again, it's good news. It's very good if a consumer or a subscriber can have his 3G data connection all over the country without paying some ridiculous charges if you shift from one network to another. And as far as the telecom sector is concerned, data is the key, both in terms of growth, as you mentioned, and also in terms of revenue. I mean, voice is not really making much money. The global trend is, as more and more people are on the net, smartphones coming, people are on social websites. Even this election has been, fought at least in the urban areas to a large extent on the internet. So any move by authorities, regulatory or statutory, to facilitate data along with roaming all over the country, I think it's a very, very positive thing.
Well, just some insights on data usage and just how it's grown. If you look at Bharti's numbers, and the company reported numbers just last week, apart from the fact that their profits are up some 90%, Idea's profits were up some 100% year on year. Data itself, for instance, for Bharti, from being just 6.4% of revenue last year, it's grown to about 11% of revenue this year at the end of the fourth quarter. But will data then start perhaps going the voice way, where tariffs start declining? Or do you think that companies now are in a very, very strong position when it comes to pricing, both voice and data?
Well, for the moment, they are in a strong position, but we also, we are expecting the launch of 4G services. And whenever a big new player comes, so it's pretty much possible, I would say even likely, that it would like to, have a big bang entry in the market. And pricing could be one of the instruments it would use to penetrate the market. So, like this company did when they entered voice with CDMA, from days when 16 rupees a minute, even for incoming, it came down to paise. So those pressures can come. They can come in data also, which would eventually be quite a game changer for the sector. But that's a space to watch out for.
Sure. Very, very interesting times. Of course, in the last couple of weeks, we've seen Vodafone increase its stake in the Indian subsidiary. We've also been through a period where these companies have shelled out enormous amounts of money for the last auctions. I think 18,000 crores is what Bharti had to pay out for spectrum. So, given all of this, what does the immediate future look like? Are most of these hurdles behind the companies, or is there more trouble to come from a regulatory or just the sector standpoint?
It would depend to a large extent on a sort of an ideological stance which the new government would take. Because there are two issues here. One is, do you want to provide telecom services, good, efficient, fast services to more and more number of people? This, to an extent, conflicts with how much money does the government want to earn from spectrum and various services. So it depends where you draw a balance. And they're very ticklish, troublesome issues because, there's been talk of huge scams and, giving away spectrum cheap. But if you have a strong government which transparently takes a decision one way or the other, so the growth of this whole sector would depend a lot on what kind of a decision is taken there. Now, even in this 3G roaming thing, the counter-argument from the government really was that it violates the license and, there'll be a revenue loss of...
Because you haven't taken a pan-India license, so how is it that you're offering services in every state or in every telecom circle?
So some fine has been imposed and their calculations of revenue loss. So this debate between, how much the government can and should earn out of this and how much is it willing to surrender from this assumed earning, to spread the telecom services to a growing number of people and to spread the second stage services beyond voice services. So that's a decision, a strong decision the next government will have to take, and that will determine the course of things in the sector.
Sure, among the many, many decisions that we're all awaiting once we actually have a new government in place. All right, on that note, another quick break. On the other side, India is the world's third largest economy. But on which parameter, how, we get you all the analysis. Welcome back to Policy Watch. Some interesting global statistics now. India has emerged as the third largest economy in the world, ahead of Japan, based on purchasing power parity. According to a new report released by the World Bank, the US continues to top this table, followed by China and then India, in a count that is done every 6 years by measuring economies on the basis of their purchasing power parity. Now, PPP is price relative. It shows the ratio of prices in national currencies of the same goods or services in different economies. The US controls about 17% of the world's gross domestic product, or GDP, based on this PPP measure, followed by China, which holds roughly 15%. India comes in number 3 at 6.4%, leaving Japan far behind at 4.8%. Now, middle and high income economies seem to be contributing quite equally to world GDP. The 6 largest middle income economies, that's China, India, Brazil, Russia, Indonesia and Mexico, account for about 32% of world GDP. Whereas the 6 largest high-income economies, that's the US, Japan, Germany, France, UK and Italy, they account for 32.9%, so roughly 33%. So far, so good, but the game changes when one starts looking at GDP per capita. India continues to rank poorly in terms of per capita GDP, coming in at 127th position compared to the US, which is at number 12, Japan, which is at number 33, and China at 99. Some more interesting statistics here. The 5 economies with the highest GDP per capita are Qatar, Macau, Luxembourg, Kuwait and Brunei. The 5 economies with the highest actual individual consumption per capita, highest consumption, Bermuda, US, the Cayman Islands, Hong Kong and Luxembourg. Okay, so lots of data and statistics coming in here. Let's just look at what's relevant for us, Himangshu. Now, number 3 in terms of purchasing power parity. Explain this concept to us and how relevant it actually is.
Purchasing power parity is an important concept because if you look at purely on dollar terms and you look at GDP, things get understated for a country like India.
Because the currency is weaker.
Yeah, currency is weaker. But if you see how much people can actually afford given their salary, to give you an example, if you are in a Western country and you want to have a bottle of a soft drink, it will cost you an equivalent of maybe 200, 300, 400 rupees to have that. And you would need that kind of income.
Right.
Whereas in India, you can get it for 10 rupees, 15 rupees.
Right.
And therefore, even if you're earning much lower in India, you will have access to a comparable service.
I'm not sure about the 10 or 15 rupees even in India, but yes, definitely, okay. Definitely yeah. Between 50 to 100.
Yeah, it will be double digit.
Yeah.
Whatever. So what it means is that with a lower income in this country, you can have access to certain goods. Sometimes it's the other way around also. But by and large, it's a good indicator of, when you're looking at comparable economy. If you're comparing economies, it's good to see the actual purchasing power. But as far as ranking is concerned, to me, the only interest is if the ranking improves.
Okay.
When the next time the survey is done. Otherwise, a large country with 1 billion people is bound to be bigger than...
As of now, I think the 2011 ranking showed that we jumped up several notches from the previous ranking. So you think, given the trends, are we likely to, see this go up? And then again, I'm asking the question of relevance, because let's say the next time the World Bank does this, after 6 years, we might be number 2 in the world. But what does that really mean? Does that mean that, we are alleviating poverty? Does that mean we're controlling inflation? How good is it actually for our economy?
Well, see, if India becomes number 2 in the world after 6 years, that means it would have done better than either USA or China, the 2 countries above us. So it's finally a relative ranking. If those countries are also doing fine, it would mean that there has been some equitable growth in this country. If this country continues to grow, overall incomes are good, the purchasing power of people remains good. So it is a positive. The only thing to note is that simply being world number 2, 3 or 4 doesn't mean you're having a great time. It's because if Africa was, the whole continent was one country, I think it would be number 1. So it's a question of size at the end of the day. It
does not typically depict the strength of the economy or the intrinsic sort of factors that are at play.
It depicts the overall size of the economy. It does not depict, how many people are sharing that cake. Simply because the cake is big doesn't mean that everybody is getting a good slice. In India, many more have to share it.
Which is what I guess comes out from the other parameter, which is GDP per capita, and that's where we slide down to number 127.
Yeah. because that's what really determines the actual standard of living. You know, a Scandinavian country would perhaps be nowhere in this rating. You saw Brunei in the individual thing because it is a rich company, it's got a rich country which has got resources, and which are divided between a far fewer set of people than in India, which has got more than 1 billion people. So it's a mixed thing. It is good that India has improved its position. It's good for the economy. If the size is big, that means the Indian market is pretty large. There is a huge customer base for all kinds of products, and if it improves, it's even better. But nothing to be proud of that. Because the reason of that ranking is basically because of the size and population.
I guess that could be one reason why this has not been made a poll plank. We still have a couple of days to go, a couple of phases of voting to go. But neither side has made this an issue.
Yeah,
so.
If anybody says, that India's standard of living has improved dramatically, then it would become a matter of pride for the country.
But so far, I think the political parties are staying away from this ranking.
Yeah, which is good.
All right, Himangshu, we'll wrap it up on that note. Then thank you so much for taking out the time for this week, and we thank all our viewers for joining in as well. That's it. We'll be back next week with more stories.